Mortgage Monday. VA mortgages, that's what we're going to go over today, or VA loans. But somebody had a question. How do you assume a government mortgage, FHA, VA? So I do know they are assumable. You have to go through the current bank will have their own. It's almost like assuming a lease. I don't know too much about it. I personally have never done it. That's something that I know people that have done it. They've gone through the current bank and they have assumed it that way. Okay. So again, I don't know much about it. I can find out. If you want to hit me up later, I can find out more about it. I don't want to give a wrong answer, Robert. If, again, never done it, I'm not going to talk on something I've never done personally. But I do know they are assumable. One of the few mortgage loans out there that are assumable outside of commercial. Okay. But again, they are. I just don't know how. Let me grab my guidelines real quick and see if I can answer that. Hey, Robert. So I looked up some of my guidelines. Okay. We do have to, I think, just like I figured, they do have to be credit worthy. They're going to go through everything. Here's the best part about assuming it. The interest rate does stay the same. You do need to be credit worthy, still need to go through the same underwriting process. Good thing is you keep their interest rate. Here's one of the biggest differences. Let's say they've had their VA mortgage or FHA mortgage for 10 years. The difference between the purchase price and the mortgage, you can't add to the mortgage. It stays the same. So if they go down to a $400,000 mortgage and your purchase price, let's say, is $500,000, you would have to come up with the difference. All right. So my guidelines do say a second mortgage is allowed. So I don't think up to 100%. So one of the benefits I can see in this market of assuming an FHA or VA mortgage, if they got it a few years ago, obviously the biggest thing would be the interest rate. So if you have money to put down and you can find an FHA mortgage that you could be assumed, I'm all for it. Mr. Vecchione, what are the parameters and different in any way between FHA and VA loans? Here's the biggest difference, my friend. 100% financing and no mortgage insurance on that 100% financing. You just pay a VA funding fee, which is different per loan. If they used it first use, consecutive use, subsequent use. So there is a chart that I use that puts on each loan. But to me, those are the biggest differences, financially. I mean, other than you have to be part of the Army to get a VA loan. FHA, normal citizen. VA must be a veteran or in it or have served in one of the armed forces. So those are the main differences. Other than have to be in the Army. Financially, no mortgage insurance premium or no MI, which I'm going to start the slideshow team. Okay. I'm going to start that now. And bear with me. Let me share my screen. Okay. So let the presentation start. What is the VA loan? VA loan, also known as a Veterans Affairs loan, is a type of mortgage loan program available in the United States specifically designed to assist current and former members of the U.S. military, as well as eligible surviving spouses. The Department of Veterans Affairs, VA, guarantees these loans, making them more accessible to qualified individuals. Okay, guys, I'm not going to say an FHA loan on steroids. I'm saying FHA loan that goes to the gym a lot. It does have a little bit more bells and whistles, as deserved by these individuals that help serve our country, help keep us safe, all for it. So I'm going to get into a few key highlights. So there is a VA funding fee. One of the biggest differences that Mr. Vecchione has asked, what's one of the biggest differences? Well, here's the first thing. One of the key highlights. There is a VA funding fee. There is no MIP, mortgage insurance premium, or MI, mortgage insurance. All right. One of the most attractive things to a VA loan is, I don't know if you guys can see my mouse, is this thing right here. Okay. Is 100% on a purchase. Okay. We close a bunch of these a month. Okay. It's our most popular, as far as conventional, asked for. Obviously, not everybody qualifies for it, but it's, again, 100% purchase. And in essence, guys, you could get 106% financing and come to the table. You only have to come with 5% of what's required. So if you're not required on the 100%, you don't require, but let's say you have to come to the table with $10,000 in closing costs. You'd only have to come up with 5% of that. Because, as you can see here, I'm going to highlight this, max seller's concession of 6% on primary residence. Okay, and you're only allowed primary residences, but 6%. So what does that mean? A seller's concession is when the seller pays some of the closing costs. Okay, or all of them. In this case, it's 6%. They cover all of them. All right. Primary homes only. Sorry about that. Max is 90% cash out on a cash out refi, 90% of the value. So again, I'm going to use simple numbers here. $200,000 value, I can get a max loan of $180,000. Okay. They're always full documentation of income. I don't care what anybody tells you. I've never seen other forms of income to get in a VA loan have to be full documentation of income. All right. Must pass that desktop underwriter I'm always talking about. Guys, conventional government loans always have that desktop underwriter, almost like a pass-fail system. It analyzes a bunch of data points. Yes, you can do, I believe you can do manual underwrite. Don't hold me to that team. If you're a VA expert, jump in if you want to. I'm not ashamed to be called out if I know something wrong, because I should know everything. But I'm pretty sure it has to pass the system. I don't think there's a manual underwrite for VA. I know there is for FHA, but I will check that on my guidelines. All right. Loan limits, like any other either government-sponsored entity, GSE, like Fannie Mae and Freddie Mac, or government loan, there is county limits. For an example, had somebody call me up for an FHA loan. North Carolina wanted to buy a $1.1 million house. They couldn't do it. Why? Because FHA county limits in most of North Carolina is $731,000 on a single family. And keep in mind, team, the more families you do, more units there is, the higher the loan amount. For example, I don't know, we might be close to 2 million here in New York on a VA, FHA, and conventional for a 4-unit, which is about what they're going for. So keep that in mind. If somebody tells you they're getting a $2 million VA loan, let's see what they're doing. They may be putting down 1.9 million. Okay. Lenient credit requirements on a VA loan, pretty much, again, very similar to VA, FHA, guys. But like I said, the key difference is there's no monthly mortgage insurance fee, and you can do 100% financing. All right. And it's the same thing. The VA in this case, not the VA portion of the government, that arm of the government is who guarantees this. So just like the FHA loans, the VA is a funding fee, and all that money you put in, the funding fee that you do on your monthly loans, which is financed in, guys. All right, they don't have to come to the table with that. The funding fee is put into a pool. This way, if we, the lender, I am a lender, guys. Don't forget, I am a mortgage banker, not a mortgage broker. So again, we underwrite these things. They are our loans. We underwrite them. We do sell them, but we do underwrite them in-house. Okay? So again, that funding fee goes to a pool to cover losses we may incur as a lender if somebody defaults. Okay, so here's the funding fee explained. All right. All right, so the amount of a VA funding fee can vary depending on factors such as the type of VA loan, borrower's military service, the down payment amount, whether the borrower has used the VA loan before. Here are the VA funding fees as last updated September, as long with some examples to illustrate how the fee works. All right, so regular military borrowers purchase, 0 down is high. Obviously, you can see, team, the more you put down, okay, your funding fee goes down. Why? Because you have some skin in the game. And the government's risk of you defaulting lessens as you put money down. If you have what they say, again, skin in the game, you're going to try and do whatever you have to keep that house. If you do 100% financing, your odds of foreclosing, not going to be significantly higher, but higher than a individual that put money down. All right. So cash out refinance loans would be the next thing. 2.3% of the loan amount for down payment percentages. Example 1, regular military borrower purchases a home with no down payment and the loan amount is $200,000. The VA funding fee would be 2.3% of $200,000, which equals $4,600. This amount is added to the loan amount. So the loan amount, as you can see, would be $204,600. And again, guys, the fees are always, the funding fees are always rolled into there. All right. This amount is added to the loan. Example 2, the same regular military borrower above has put 5% down. The loan amount is $200,000. 1.65 equals $3,300. So that's the new loan amount. Okay. So it is the reserves and National Guard borrowers. It's a little bit different for them. Same examples would apply, but the down payments are a little bit more. Okay. I'm sorry. The funding fees are a little bit more. So again, guys, there is no mortgage insurance premium on these files. There is a funding fee. Okay, so even if they put 100% down, there's no mortgage insurance premium. And right now, the rates on this are probably the lowest out of all the conventional, let's say conventional and government loans. So now, one of the most important things as a lender, which we will help you get, need to get something called a certificate of eligibility. That lets me know how much you qualify for. It is an essential requirement when applying for the VA loan, as it demonstrates to the lender the borrower meets the necessary service eligibility criteria to qualify for the specific type of mortgage. All right. To obtain a certificate of eligibility, my processor Tracy, in my operations department, she's kick-ass, as well as Liat. They're both really, really, really good at what they do, and they'll help. If you guys have somebody that wants a Veterans Affairs loan, a VA loan, we'll help them get that certificate. All right. They need to provide always need to provide proof of military service, such as a DD 214, which is their release lets us know that they had an honorable discharge, or an NGB Form 22. The National Guard lets us know you had an honorable discharge, and we also need to get your certificate of eligibility. Again, these are very important parts of a VA loan. If somebody tells you don't need them, you're not getting a VA loan. If somebody tells you have to put money down, most likely not getting a VA loan. Okay. You need to service status, such as the latest retirement point statement. So I've never done one for somebody in the National Guard or Reserve members. I've only done them for active military. Done a couple of hundred of these in my career team. Just for some reason, never the National Guard or Reserves. Because I feel most of the time, if you're in the Reserves or the National Guard, just because in New York, a lot of times your eligibility is not enough money-wise, monetarily wise, to get you into a VA loan. All right. So again, you always need a certificate of eligibility. Once I get that, it lets you know how much you have a VA entitlement. All right. And again, guys, this is going to be a quick one. Hopefully there's a bunch of questions in there. Here are the eligible properties. Single family homes, condominiums, as usual, must be VA approved. All right. So when you buy a condo, there's two portions that are approved. You as the buyer or the borrower, and then the condo as a business. Because think of it, they collect association fees. We have to make sure the association fees are keeping the condo up to date, because they are responsible for the outside, the structure. For example, here in New York, there's a lot of maintenance that needs to be done in these buildings. Yes, there's more people. For example, they'll have different things to maintenance. There's no lawn, but there's boilers that need to be maintenance. Sometimes generators, the window washing apparatuses. Not only do they make sure the windows are clean, it also does maintenance on the outside. So that's down. Sometimes the maintenance can't be done. So we want to make sure the condominium is A, up to par safety-wise. B, they can handle their finances. C, is running as a healthy business. So that's why condominiums must be approved both as for the borrower and as a business. Now, multi-unit properties. We could do 1 to 4 family team. That's it. Must be a primary residence. You're going to have to live in one. And then we could use the market rent from the other units. So if you're buying a 4-unit, I could use rent from the other 3 units you're not living in, but the borrower must be living in one of the units. All right. And manufactured homes. Okay. Now the manufactured homes, again, they need to have what's called the hurricane straps, be tied down to the foundation, not be movable, no wheels, no nothing. And then the second thing, they must have what's called a HUD tag, HUD. Now, that gives the serial numbers, that gives the lot, the whole nine, gives us a bunch of important information that we would need on that. Okay. So here's some basic income documentation, team. Same as every conventional VA, FHA, USDA loan. This is the basic requirements that are always going to be needed. All right. It's pretty much, I left this in here. This slide goes from 4 to 5 different types of loans, because it is completely almost the same thing when you go full doc once needed. All right. For those, I'll leave that up there for a second for those who need to maybe want to copy it down. But again, team, whatever you need, so you know how we work here, you refer a loan. I assess the situation, me and my team, myself or Ashley, or one of the 15 guys we have on the floor, we'll speak to them, all very knowledgeable. Once we assess the situation, we send out a separate link with a documents need list tailored specifically to that borrower. For example, they may get income from the Department of Defense because they're retired. I need an award letter. All right. If they're retired and they get pension, I need an award letter. So again, this is the basic stuff. We do tailor it to the borrower depending how they get their income. Let's say they're big on rental income, or let's say they get dividend income. Tons of ways people get paid, team. we tailor it again, that list, to what they need. So don't beat yourself up trying to memorize this. This is what we get paid to do. This is why I'm licensed. This is why they come to us. You guys just give us the loans, you go get more, and we close it, and everybody's happy. Okay, so that's documents. Occupancy types. All right, there's only one type, guys. Quick slide. Primary residences only. Okay, and as you can see, they'll live there for majority of the year. Yes, you could be what's called a snowbird, but you have to live there majority of the year. Snowbird in New York, to me, they're up here, in New York most of the time, then they're in Florida most of the time, or vice versa. They go to Florida for the winters, and then they're up here. So their primary home may be in Florida. So you do the VA loan on the Florida house, and then New York is the second home. Why? Because they're here maybe from April to November, or maybe they do 6 and 6. So that'll be assessed at the time of application, which route we're going. And here is my beautiful mug, a face for radio, as my mother would tell me. Okay, here is this. Oh, don't remove that. This is where, if you got your smartphones, you could click on this. It gives you all of my information, digital card, my website, how to get in touch with us, how to put in a lead. A lot of stuff is on there. If you guys feel there's anything I could add for contact, let me know, and I will add it to there. Okay. I'll leave that up there for a minute, and I just want to see. Okay. So there is a couple questions in the Q&A I'm going to answer. I'm going to just leave that up there. Okay. Is the homeowner required to do certain things for the buyer based on what the mortgage they apply for? The homeowner, only if they're going to assume it, Mr. Vecchione, that they have to provide them with some documents. But, you're an inspector. Sometimes the homeowner is required certain things like railings. There has to be railings there, FHA, VA. You have to do a different inspection, possibly if it's for an FHA loan. Termite inspections are big on both. Have to do termite. I heard you don't need to be a veteran if you purchase a VA foreclosure. Please, can you confirm this? So a VA foreclosure, no, you don't need to be, I'm pretty sure. That means that the VA foreclosed on the property. Okay. Sometimes if another veteran buys a VA foreclosure, it is advantageous. Sometimes they'll help them out, give a special deal, I believe. I'm pretty sure anybody can buy a foreclosure. It just happens to be owned by the VA. Okay. Now, sometimes it might not be beneficial if they put 100% down. The VA may be asking for more because they want, the lender wants to recoup more. But keep in mind, sometimes it might not be Veterans Affairs. Just because they foreclosed on a VA loan, that doesn't mean the VA has it already. So yes, the VA sometimes does own properties. Yes, FHA does own properties, but they're HUD properties. So yeah, anybody can buy them. HUD has a special program, $100 down to buy a certified HUD foreclosure, but they foreclosed on the properties already. But again, keep in mind, team, we as the lenders do the foreclosing. We are just subsidized. No, I shouldn't say subsidized. We recoup some of our losses from the government via the VA funding fee, which is a VA fund and is an FHA fund. So again, the government is like co-signing on both sides, and they tell the lender, be a little bit more lenient on your guidelines. Since we are co-signing for them, since we're co-signing for them, make your guidelines a little bit lenient. And what do we make more lenient? Sometimes the DTIs can go higher. As you can see, higher financing, like 100% or 96.5% on an FHA. And again, FHA to me, one of the biggest differences, besides the 100% financing, no mortgage insurance, team. That's very big. That saves a lot of money, especially if you're at the $900 range. Mortgage insurance, I'll give you an example. Mortgage insurance on an FHA loan, let's say it's a $900,000 loan. All right, it's 0.55 times 0.55%. Divide that by 12. That's $412 a month on a $900,000 loan. They're very common here in New York, team, for us to do that, whether it's a single family or a two family. So that's one of the, again, biggest differences. You'd save $412 a month doing that. Okay. With that being said, team, I don't see any more questions. A quick one, almost 22 minutes tonight. Not bad. Not looking for personal records, but I also know people are very busy, so I don't want to keep everybody too long. Okay. I thank you all for coming on. If you guys have any questions, again, hit me up personally, privately. I'll throw my contact information on there for a few more seconds. Another minute. Okay. Again, team, this is, if you see this, grab your cell phones real quick, open up the camera, click on that, and it will give you my contact information. Again, QR code, for those that are a little new, maybe not so technologically savvy, click the camera, click the QR code, and that'll give you all my contact information. I am very accessible. If you talk to anybody that has dealt with me in the past, present, maybe the future, who knows? If you do, get me the lottery numbers, and I will share the wealth. But click this, it'll get all my information. With that being said, team, I bid you all adieu. All right. I want to thank you for your time as usual. And see you all next Monday. I will announce what we're doing tomorrow. I'm going to assess the situation, see who needs to learn what, and then we'll take it from there. All right. Everybody have a good night. Thank you, guys. Thank you for the questions as usual. Hopefully this was helpful. If not, let me know what I need to change. I do not get mad at criticism. Always looking to make myself better. You guys can help me do that, and I'll change it to anything within reason. All right, guys. Speak to you all soon. Enjoy your dinner if you're on the East Coast. If you're on the West Coast, keep working, man. A lot of daylight left. Speak to you all soon, guys. See you next Monday.